Hello guys, welcome to Daily Dose by Finity. ELSS funds or equity-linked savings scheme are equity funds that invest their corpus mainly in equity or equity-related instruments. The asset allocation in ELSS mutual funds is generally 65% towards equity and equity-linked securities like listed stocks. These funds have a lock-in period of 3 years, shortest among all Section 80C tax savings investments. Tax advantages. Through ELSS investments, investors can get a tax deduction under the Section 80C of the Income Tax Act of 1961. Dividends or long-term capital gains from these investments are exempted from income tax. Returns from ELSS are therefore tax-free in the hands of investors. There is also a tax rebate for equity-linked savings schemes (ELSS) under 80C of Income Tax Act 1961. As per this, one can invest in ELSS and get a deduction of up to Rs 1.5 lakhs from the total taxable income. Comparatively higher liquidity. ELSS provides higher liquidity as compared to all other 80C investment options. ELSS mutual funds come with a lock-in period of 3 years. Thus, while invested in ELSS, an investor's capital is not locked up for long periods and they have an option to redeem their investment partially or fully post-completion of the lock-in period. Long-term capital growth. While the lock-in period for ELSS is 3 years, an investor can remain invested for a longer duration to increase the chances of continued growth of the invested capital. Promotes a habit of saving. ELSS allows investors to systematically invest through the SIP mode with as little as Rs 500 per month. A portion of an investor's savings can turn into investment as ELSS helps cultivate the habit of continued investing. Benefit of equity exposure. Through savings, one can gain about 6 to 8% returns. However, by investing in equity, there are chances of gaining higher returns, especially during favorable stock market performance. Hope these points help. For more tips like these, follow our YouTube channel and Instagram page. Happy investing!